So hi, welcome to the Unity Focus session this afternoon on service accommodation. We're going out recording, and this will be on the Unity YouTube channel. We've got a good 14 people in the room at the moment, so hopefully they will keep it relaxed and interactive with questions. Please come in with your questions at any time during the course of the afternoon. If anybody's got any contributions to make, see any glaring gaps in what I've got to say, then please come in and help me out, because really this is an information sharing rather than a formal presentation from that point of view. The background to this is from our cafes. We've had numerous feedback and chats about service accommodation, and people have fed back that they'd like to learn a little bit more about it. So there's those of us here who do it, who have the knowledge, and there's those of us here who haven't done it. We're just trying to fill in for you guys, so that when you're looking at deals and opportunities in the future, you know what service accommodation is, you know how it might be able to fit into your planning, and you've just got a better feel for whether or not that's an opportunity for you. Clearly, if your career, your desire lifelong is to go into building up a great big portfolio of 50 to 100 service accommodation units, then you're going to need a little bit more support than this session on its own. But nevertheless, this is really about giving people a wider, broader knowledge in property. Those of you who are not doing service accommodation at the moment particularly will have a better feel for this and how it might be able to fit into your portfolios and your development opportunities going forward. I've got a bit of an agenda to start to go through, so I'll kick off with that. And the first question really on the agenda is, why would you do service accommodation? And this question is put in the context of people who are currently operating other property related strategies. There might be hold strategies such as buy to let or HMOs, or indeed they might be doing developments which they're either selling on some or holding some. So why service accommodation, potentially, as opposed to its probably closest exit to a similar property, which would be a buy-to-let situation. The things I've listed, the three main things I've listed why you might choose to do service accommodation is, firstly, control of the property. When you have a buy-to-let property and you let it out on an AST, you're basically giving over that the rights of that tenant to the Housing Act 1988, and as you know, that tenant has considerable rights and increasing rights over time. So one way to counter that, if you want to maintain control of a property, perhaps you're keeping that property for a medium period of time, and don't particularly want to have a problem in the future of evicting a tenant, then or perhaps, as well as is in our case, you're operating another business within the same building, and you want to maintain control of that unit to make sure that you've not got a tenant that decides to buy a drum kit that will then potentially upset the other operations that you're doing in the same building. So there are different reasons why you want to maintain control of your property. Now, of course, with service accommodation, you can maintain control because your guests tend to be coming and going very regularly. It's very easy to evict service accommodation guests if there are any problems. And it's very easy to just close down the calendar on it and have the thing empty or for your own use or your family use whenever you so wish. So service accommodation gives you control of the property. And I think that's one of the key aspects of this, particularly for people who might be doing developments and might be thinking about multiple exits from their developments. I'm considering stuff that Shane does. He's bought an old commercial unit. He wants to put 15 flats in it. and there's one out the back there with a bit of parking on a ground floor and a separate entrance and stuff like that, which is just perhaps suggesting that that one would be a good serviced accommodation exit, whereas all the others might be good for AST, or he might choose to sell off some or all the others. So he can have mixed, multiple exits from his situation from that point of view. The other thing, which is always nice to know and not nice to have about serviced accommodation, is that if you do it right, it's quite considerably more profitable than doing it for a buy-to-let. And I think just to keep the thing animated and interesting, if I could share a screen, if I can find it here. So there we go. So there we go, that's better, isn't it? So I take it you can all see that. Shout if you, yep. So this is a unit that I've got above Elena's clinic in a building in Loughborough, not far from the university. And this flat, when we bought it, did have a tenant in it. It had leaking roofs. It was not in very good order at all, to be honest. And the tenant actually left a week after we bought it. And we were absolutely delighted about that. And this is what we did to it, to refurb it into a rather nice upmarket unit, 2 bedrooms, nothing too big. And the tenant was paying £550 per calendar month in rent. This is it here, so not very attractive from the outside, but it didn't matter. This is actually as we bought it. This is now completely different because we've done a back-to-brick refurb on this building. So the tenant was paying $515 a month. Obviously, there are landlord costs to come off that for the bottom of the profit and loss, not massive amounts, particularly if you discount the mortgage, because either way, whether you're doing serviced accommodation or whether you're doing buy-to-let, you either have a mortgage or you don't. So I tend to just discount that part of the expenses when we're doing comparisons. But the use of it that we did from 2018, March 2018 until today, well, let's say until March 2020, because obviously COVID has changed the dynamics, the financial dynamics a little bit. So for that 2-year period, we have averaged on the profit and loss of that particular unit, £1,500 a month. And that includes all business costs, accountancy fees, and a lot. So considerably more income has been derived out of that building for being a serviced accommodation unit than being a buy-to-let property. So that's a good reason to do it, of course, although one might argue, and probably correctly, one might argue that there's a lot more work involved and really you should cost in your time and the work into that. If I was to cost in time and work into that, it wouldn't really scratch the surface compared to the profitability comparison, if I'm honest. The truth is, I've got mixed portfolios all over the country with HMOs, buy-to-lets, commercial units, rentals to charities. You know, it seems to me that you name it, and I've dabbled in it somewhere along the line. And I would not argue very strongly that service accommodation takes up more time than all of the others. The buy-to-lets might run for 9 months to a year without any input at all from me, and then I might have 3 months of really hard work with a tenant and a buy-to-let and a problem. So over the long term, I don't find that the service accommodation is hugely significant in terms of additional work compared to the others. And then the third thing, which will bring us on quite nicely to our first expert guest, Yuliya, is that there are some tax benefits in doing serviced accommodation. And I'm going to bring Yuliya into the room now, and I'm going to start, Yuliya, I know that you've got something prepared and presentation that you'd like to share. So what I'm going to do is I'm just going to introduce you, Yuliya, with some questions that I would have of you. And then perhaps at the end of the session, we might revisit some of those questions, but I'll probably let you just go through your presentation after I've asked the questions so that the presentation may well answer it as it goes through. Yuliya is a practicing accountant. She's already introduced herself to yourself, and she is an experienced service accommodation provider as well. So who better than to bring in and talk to us today? Some of the questions I'm going to be asking, and I'll come back to at the end if they haven't been covered in the presentation, is what is the difference between trading income and investment income? Because we are told that service accommodation is trading income, and we're told that buy-to-let is investment income. But what does that actually mean? What do we understand about that? The other question I've got is, my accommodation unit is in Loughborough. It's probably as far from any holiday resort as you could possibly be in the country. And my question is, what is furnished holiday lets, and how might that apply to me, having a service accommodation unit in the centre of Loughborough? What do we mean when we talk about furnished holiday lets, and can we differentiate that term from the term that we are generally using, which is service accommodation? I would be asking, and I'm sure Yuliya will be covering it, anything about, what about the Section 24 mortgage interest deductibility that takes place with buy-to-let? What are capital allowances, and how can they be applied in this situation, and how would that differ service accommodation from buy-to-let? What happens when your revenue exceeds the £85,000 VAT threshold? And how might that affect your market, particularly if you're focusing on corporate customers and lots of direct repeat business from companies? Then finally, is there a differing situation with the VAT if you happen to be operating a rent-to-rent operation, which I know a lot of service accommodation providers are doing, where they're actually renting the property, taking control of the property, but not taking ownership of the property, and then making a margin on the amount that they're paying to the owner of the property and the operation that they're doing. So those are some of the questions that I'm sure you're going to be covering by default, Yuliya, but maybe we'll come back to at the end of your presentation and just cover, complete those off if there's anything there to be done. So yep, Yuliya, over to you.
Okay, thank you, Rupert. If you have any questions, please feel free to stop me and ask questions as well, ask for clarifications. I'm trying to share my screen now, hopefully. Hopefully it would work. Just bear with me 1 second. Right. Okay. Right. Okay. So can you see my screen now?
Very well.
Yes. Okay. So my company's name is Port Marine Accountancy. We've been practicing in the UK for about 10 years now, and there is a group of us. It's not just me. Yes, if you need any accounting help, in future, please feel free to approach us. The things I will be covering today is, like Rupert asked me to cover, furnished holiday let, Section 24, capital allowances, VAT, and TOMS, tour operators margin scheme. So we will start with furnished holiday let. For HMRC and the UK taxation, there isn't such thing as serviced accommodation as such, So in the eyes of HMRC, the serviced accommodation is a furnished holiday let for taxation purposes, irrespective of where it is located. what is it? In order to qualify as furnished holiday let, the property needs to be, first of all, furnished, situated in the UK or European Union, commercially let with intention to make a profit. Also, it should be available for short-term letting less than 31 days for at least 210 days in a year, and actually let to the public for at least 105 days in the year. The property can't be let to the same person for more than 31 days at a time for more than 155 days during the tax year. So there are special tax rules for rental income from properties that qualify as furnished holiday lettings because the income is viewed as trade income. So Rupert asked me a little bit about to discuss and explain a little bit about the difference between trading income and the investment income. So trading income, when the income you receive from your business is classed as trading income, you can qualify for certain reliefs, such as capital gains tax reliefs for traders, such as business asset rollover relief, entrepreneurs relief, and so on. Also, when the business is a trading business, it can claim capital allowances on things like plant and machinery, which would be for service accommodation would be furniture, equipment, white goods, and we will cover it a little bit more later. The profits received from trading income also count as earnings for pension purposes. You probably know that in the UK, it's only a certain amount of earnings you can put into your pension plans. So these particular earnings from service accommodation would count towards your allowable earnings, which you can then invest as pension. The mortgage interest is also allowable expense for taxation purposes, which is a big benefit for the property owners. HMRC can inquire into your furnished holiday let status, so you should keep up-to-date records of guests that have been staying at your property, including their names and addresses and the dates of their stay. So Rupert asked me to cover section 24. So section 24 is it's a section of Finance Act 2015, and it was introduced in April 2017. This particular section removes a landlord's right to deduct mortgage interest and other finance costs, such as mortgage arrangement fees, from their rental income before calculating their tax liability. Instead, a landlord is given a basic rate tax deduction, a maximum of 20% of the disallowed finance cost. So comparing to previous situation, especially from the current year, or the last year, which just finished, 2021, the mortgage interest, you're no longer allowed to offset mortgage interest against your income from property. But if you operate the property as furnished holiday let, you still can do it, which is a great advantage. Capital allowances. Capital allowances is a gradual writing off of capital expenditures. This kind of tax advantage is used for trade businesses. Therefore, furnished holiday let or serviced accommodation is entitled, but buy-to-let businesses or the income from buy-to-let can't claim. It can't be claimed, against the income from buy-to-let. Capital allowances can be claimed for furniture, fixtures, white goods, certain parts of the buildings, such as electrical, lighting, heating, and ventilation systems, but not the cost of the property or land. Right. I'm having some technical issue here as well. Right, so what happens when your revenue exceeds the VAT registration threshold? So as you know, the VAT registration threshold at the moment is 85K. The next question that Rupert asked me is also, how does that affect corporate customers? Yes, so the VAT registration threshold is 85,000. The turnover should reach 85,000 within the 12 months period. As soon as you hit this threshold, you got to register for VAT with the HMRC, and that means, you know, that you have to apply 20% rate on top of your prices. So it shouldn't be really an issue for corporate clients, because they still would be able to claim this VAT back. But if you just sell to the general public through Airbnb, that increase, you know, it would affect your profits really, you know. So in order to stay competitive, you will have to take the hit basically of this 20%. Well, there are various schemes available for different types of businesses, such as flat rate scheme and various margin schemes. And I wanted to discuss the particular tour operators margin scheme, which is applicable to serviced accommodation or tour operators. This scheme is applicable to rent-to-rent serviced accommodation operators. So it wouldn't be applicable if you own the property and operated when owner operates the property, the rental of the serviced accommodation of his property. So this tour operators margin scheme is only available to businesses that buy and resell accommodation, acting in their own capacity, in their own name. So this is perfect for serviced accommodation. If your supplies are to business customers, which are for subsequent resale, wholesale supplies, this supply doesn't fall within TOMS. As a tour operator based in the UK, you only account for VAT on the difference or on the, between the amount you receive from your customer, including any amount paid on behalf of your customer by third parties, and the amount you pay to suppliers. So you basically account your VAT on the margin, or on the you would say your profit, operational profit. You cannot reclaim any VAT charged on the travel services and goods you buy in and resupply. Although you can still reclaim, subject to the normal rules, VAT on overheads outside TOMS and in-house supplies. That makes whole calculation of the VAT, you know, when you're on this TOMS scheme, a little bit more complex than just ordinary VAT calculation, and therefore you would need the help of the specialist. The scheme also brings to account VAT on any in-house supplies you make as part of a package. For example, if you provide breakfast, and this would be classed as in-house supply, or maybe you own the a bus, you know, and you provide some lifts to the to your guests. This would be outside of TOM, so it will be in-house supply, and you will have to charge 20% on it. Technicalities of TOMS. Well, first of all, you know, you need to work out your registration threshold, and because TOMS only applicable on margin, therefore you only, when you calculating whether you need to be registered for VAT or not, you add up your margin instead of your turnover. I hope it makes sense. So also, apart from that margin, you also need to add full value of taxable, including zero-rated in-house supplies, the ones I was just talking earlier. Then, as a serviced accommodation operator, sometimes we pass the bookings to each other, the operators, and then we get the commission from that. So this commission also would need to be added up in full when we determine whether we need to be registered for VAT or not. And also any other taxable, including zero-rated supplies you make in the UK. So if your business also provides some other service, you know, in the UK, which is outside of tour operation or service accommodation operations, then you would also need to add the turnover from that business element to the equation. So your margin liability could be standard rated when the tour is enjoyed in the UK, or zero rated when it's enjoyed outside the UK. So this would be applicable for I think people who'd like to invest in the EU, and including Portugal. Yeah. Well, when you are registered for VAT, the very important point is when the supply actually becomes taxable. And with the TOMS scheme, you have the choice. So you could decide, and once you decided, it's very hard to change your mind. Without written permission from HMRC, you can't change your mind. So, so the supply becomes taxable on the day of departure of the traveler, of the first date on which the traveler occupies any accommodation, whichever happens first. Or you have another option, is everything what I just said above, plus you can choose to class this supply as taxable on the date of receipt of payment of a certain size. So it could be a part payment, whichever happens first. So as I said, you know, the rules are slightly more complex than just ordinary VAT operation. VAT invoice. When you operate within TOMS, you can't issue the VAT invoice to your customers. So when you issue the invoice, you should mention in there that you operate under the TOMS scheme, and the VAT element should be, you can't put any VAT amount in there. VAT returns, there are, like usual, you know, you have to submit quarterly returns, but when you're calculating your VAT throughout the year, you need to use a provisional percentage, which is quite complex to calculate. So you use a provisional percentage, and you pay provisional VAT throughout the year. And then at the year end, you need to make an adjustment to the actual VAT. And this adjustment will have to be made in the first return after your year end. So I hope I answered all the questions, Rupert, but if you still have any questions, please ask me.
That was fantastic. Such a lot of information given in such a succinct manner. So that was great. And those slides look fantastic as well. So we'll look forward to going back to those. So before I come back to you on that, Yuliya, I think we should throw that open to the floor. So if anybody'd like to ask a question, either put your hand up, put your virtual hand up, or put your microphone on and shout away. So
yes, it was just whether you've got much experience with flat rate VAT as well, potentially.
Yes, I have got experience with the flat rate VAT, but not for service accommodation, because as a service accommodation operator, if it's rent to rent, the guidance says you must use TOMS. There's no option really. Yeah.
Wow. Yeah. I mean, I'm personally not a fan of TOMS at all, but I might be biased because we failed in our application of putting something over to TOMS. So we ended up selling the opportunity. We still managed the block, interestingly, but we sold the lease. And the guys who took that on they got quite sizable grant off the council when COVID hit. It was literally 2 months before. So that's maybe why I'm not a big fan of the whole Tom's thing, because it's quite awkward to get through. My understanding at the time, and things may have changed, is, and it's interesting that point that you just made, was that tour, we're not essentially tour operators, because we're not arranging the tour part of it. And so it's just bed spaces that you're arranging. So yeah, I was advised it's just not really suitable, and it's a little bit fringe to be putting through.
It certainly requires more admin work, than the usual operation, but also it saves you a lot of money in terms of VAT, because obviously you apply your rate on the margin instead of on the turnover. Yes, in terms of Tom's, it specifically says about the flat rate. There is a part of the guidance says about the flat rate that you can't use Tom's and flat rate, and so on. So yeah, kind of you need to be really, you need to definitely, if you have a complex situation like yours sounds quite complex, then you definitely need to look into it deeper.
Just for the benefit of all the listeners now, we've introduced this concept of a flat rate scheme, and my understanding, Yolanda, and please help me with this, is that the flat rate scheme is such that instead of declaring your income and then declaring your expenses and paying the VAT on the net of the two, or paying on the income and reclaiming on the expenses, the flat rate takes a sort of middle line where you just pay a smaller percentage of VAT on the income, but you don't have any reclaim on the expenses. Now, my understanding, Yolanda, is that although the threshold for VAT is £85,000 in any 12-month period, the flat rate is available to people in most trading situations when they hit that threshold, but only up to another threshold. And therefore, if you're if you're going to be growing quickly, actually, it may only be applicable for a short period of time. Is that correct?
Yes, exactly that. Yes, you have to apply for flat rate VAT. If you chose to be on the flat rate, and the percentage is given to you depending on the industry. Percentages could be different. And as you rightly said, you can't reclaim the VAT once you're on the flat rate. And also you can only stay on the flat rate up until you hit another threshold, which I think is something not much really. But, sorry?
230 was the last
130, yeah. So don't stay between 120 and 150, So
none of us are prepared to put a number down. We're all asking each other.
Yeah, so kind of it really depends on your appetites, really. If you grow fast, and as I said, you really need to check whether you should be on Tom's or on the flat rate.
Yeah, well, I think flat rate is better for owners, right? I mean, Tom's is only for rent-to-rent.
Yes, for rent-to-rent.
If you've got essentially more than 3 units, then you are going to be hitting more than 85k, and obviously it's no good putting them in separate companies if it's the same trade.
Yeah,
so that's where flat rate would be applicable. And I think my understanding is it's 10% or 10.5% in this industry.
Yes.
The other thing that you probably might be able to confirm, just to address the point that if let's say you get a block of 20 units, and so you're going to be smashing right through that 230 threshold. My understanding though is that once you go on to flat rate, you get a minimum 12 months, no matter what your turnover is. I might be wrong on that. I mean, that was what I was told a couple of years ago.
What do you mean minimum 12 months?
Once you go flat, once you register for flat rate VAT, you're on it for 12 months.
Yes, the deregistration is another issue. Yes, and changing the schemes. Yes. Yeah.
And then the other thing so you can't claim VAT back, and that's the downside. Unless it's a purchase that's over 2,500. So if you're furnishing or something, it's worth bunching a lot of things up together and purchasing in bulk, because then you can claim the VAT back.
Yes, they have changed the rules, you know, a few years back in terms of claiming VAT and but normally you can't really, if you're on the flat rate, you can't really claim the VAT back.
Yeah, that's great. It's a good question, Sarah, as well. Thanks, Graham, for that. So just summarizing all of this and just chatting it through, and please, anybody who wants to ask questions, please put your hand up while we're talking and we can come straight on to you. There's pluses and minuses here with service accommodation. I started off saying that, you know, the profits on doing so are considerably higher than they are on buy-to-let if done properly, the caveats. The other thing, which is quite a major thing, is that you're not penalised by this Section 24 tax. So the interest that you're paying to your bank, you can actually deduct that from your income before you pay your tax. Of course, we're talking here about the ownership being in personal sole name. It's slightly different if you own it in a company. So that's a really big tick in the box from a tax point of view as to why you might wish to do service accommodation. And then this issue of capital allowances, which I feel we've covered to death over Unity, but people are still asking, can you tell me a bit more about capital allowances? And on our YouTube channel, we've got some good vids on that, because the capital allowances on buying a commercial property or and refurbishing it into service accommodation can be so substantial that they might make you choose to go forward with service accommodation as opposed to buy-let. So this is where, you know, the tax tail really can wag the dog in this situation. So there's a couple of really big ticks in the box there. But when we're talking about VAT, that's quite a serious negative, because there's a lot of people, not just in service accommodation, but who are competing for the same customer that might be guest houses, bed and breakfasts and such like, that will deliberately and continuously operate under the VAT threshold so that they don't have to pay away VAT. And it is a known cash trade, particularly the bed and breakfast trade, where people will officially trade below the VAT threshold and take any excess in cash. So you're in a competitive market, and if you happen to become VAT registered, then just think about this: 20% of your turnover has to be paid away to the government. And then you have the opportunity to reclaim on your expenses. But what of your expenses can you actually reclaim? Because your cleaner is likely to be under the VAT threshold. So you're not going to reclaim VAT on cleaning, which is probably one of the main expenses of running service accommodation. So there's not a great deal of stuff that you can actually reclaim on. And the net position is probably somewhere in the region of about 15%. So if you think about any business where 15% of your competitive turnover has to be paid away to the government before you even start, actually that's a huge detriment to that business. I know many very successful businesses who run on a 15% net profit margin. So if that was the case and they hit the VAT threshold, then suddenly their net profit would be brought to zero. That's how significant the VAT issue is. And therefore
sorry, Group, but of course, that's it. VAT, then it doesn't matter whether you're making profit or not, you've got to pay it. And actually, you know, the big perk that we always talk about, capital allowances, well, you need profit that you're going to get taxed on before you can take advantage of those. So actually, it really does. It's how you structure things is really, really important.
That's a really good point, actually, about the capital allowances. They're fantastic tax savings, but you have to have the tax to pay in the first place. Otherwise, you don't take the savings. The only good thing about that is that you can roll it into the future. So you can always live in hope with capital allowances. But the VAT is a big issue in service accommodation. And the best sort of general advice is if you're interested in doing the odd one or two, and you keep your annual turnover below the 85,000, then that's all well and good, and you don't have to worry about the VAT element of it. If you're going to go above that 85,000, you've got to have a pretty clear strategy that you're going to go up to 250, 300, 400,000 and beyond. You've got to really go for it so that you start to get those economies of scale in that enable you to still make a profit despite the VAT that you're going to have to pay away to the government in that situation. So there's a business strategy thinking there with regard to service accommodation, and VAT is a very, very significant consideration that you should make.
Of course, if you're only letting to big blue chip companies, then it's not a problem. You can just add VAT on, and so I think
we should have rehearsed, Graham. This is brilliant.
Yeah, well, and the other thing to bear in mind as well is any stay that's over 28 nights, VAT drops down to, is it 2%, I think? So,
but can you explain to us, Graham, why having a corporate client will actually help you here?
Well, because you're allowed to quote, not including VAT, to any retail customer. You have to include VAT in your prices. So if you quote £100 per night and the going rate is £100 per night, and they are a VAT registered company, a lot of the larger companies where they just got quite a huge volume putting through, you would just then invoice it out at 100 plus VAT, and they'll claim the VAT back. They've agreed to pay 100. So
if you're going to be,
of course, the other thing that people do is they'll quote a weekly rate instead of a monthly rate, and then just put it through as 4 weeks as so in other words, a month would be 28 nights. So there is little ways of making it work for the blue chips, but yeah.
So if you are above the threshold, your focus of business, your focus of your market needs to shift, doesn't it? It needs to shift to having these direct relationships with companies where, you know, you're not basically being compared on booking.com from the customer between you and the next one along. Because when you look on booking.com and you can see that one property is £100 a night, and you can see that the next property is £100 a night, as a corporate purchasing individual who is maybe booking for a boss or something like that, you're just going to see, well, they're both £100 a night. I'll pick the nicest one. But of course, what you don't know when you're picking that is whether or not that operator is VAT registered or not. So actually, if you're a VAT registered company and you're purchasing one of those properties could be considerably cheaper than the other one without you realizing it, because the VAT registered one, you'd be able to reclaim that VAT as a purchaser, whereas on the non-VAT registered one, you would not be able to reclaim that VAT. But booking.com won't tell you. On this sort of general marketplace, you won't know that. Wind it on, Graham gets lots of relationships with Experian in Nottingham and some of the big companies that often have lots of guests coming over and staying, and lots of contractors coming, and so on and so forth. They would then phone him up directly and say, well, how much is this unit? And Graham can then say, well, it's £100 plus VAT. So of course, he's immediately bringing his comparable quote down to the net rate, and then being able to charge the VAT on top of that. So that's a really good way of countering this significant problem that VAT can give when you're considering service accommodation. So yeah, thanks for your input there, Graham. That's fantastic. Yuliya, I didn't realize there was a Tom's threshold. I've written that down because that's really, that does make a difference. I always thought that when you hit the 85,000, then you'd need to consider what VAT scheme you need to be on. And Yuliya did make the point. I just want to reiterate the point, because the truth of the matter is that you don't have a choice with regard to Tom's. You either are in the scope of Tom's or you're not. Now, I accept that many people take a choice, or at least they might claim under the RON scheme and not claim under the TOM scheme. And it's unlikely that HMRC are going to actually take the point about that because, of course, they're going to be receiving more money if you get it wrong in that regard. But actually being in TOMS or not being TOMS is ultimately not a choice. It's something that you either legally are or you're legally are not. And just so that we're just clarifying the against any future confusion here, this TOM scheme is only applicable to people who are controlling the property by renting the property from the owner of the property and then operating the trade from that position. If you actually own the property in the first place, then the TOM schemes are just not applicable to you and you can just ignore that completely. So Yuliya, thanks so much. Graham, do you want to help sum up with that section?
Yeah, no, it's fine. Yeah, it's just the TOMS thing, we used a pretty expensive VAT expert who looked at it, and the advice I got was, unless you are, the purpose of it is for the guys that are, if you imagine you're arranging holidays for someone and you arrange with a hotel bulk discount and you book 50 rooms and you get a coach and you arrange day trips, a lot of these very small, like the small hotelier, the coach, they're all going to have different VAT statuses. And then of course you are selling this as a package. That's essentially what this scheme is for. It's for those guys, because otherwise it's just not a viable business. You can only really be using their margin to contribute towards their threshold. So I had it looked at and the advice came back very, very clear to me that it's not okay to be used as service accommodation. It's just it's pushing it. So I know plenty of people do it, but for me, if you're stacking a deal, just keep an eye on what if actually you don't get it through on TOMS.
Yeah. And this starts to introduce this sort of greyness of tax in that ultimately tax is something that the taxman will take a view on, you will take a view on, your accountant will take a view on, and the only one that is actually going to decide on it, if there's an argument, is the court. And that can go up and up and up to the highest court in the land.
Yeah, there's no
so
case.
There are definitely grey areas with tax, and for Graham's accountant, who has said absolutely rightly, exactly as Graham has described it, there's another accountant who would say, well, the operation of service accommodation falls into the wording of the TOM scheme, and even though the TOM scheme wasn't written for the purpose of that type of trade, it's shoehorned in there as a result of the legislation and the manner in which it's written. So
it's going to get tested at some point. It's got to get tested.
We have to let the accountants argue about that themselves, and we just have to take the best advice and go with it.
You just don't want to be that person that gets tested.
Yeah.
You don't want to be the one that they decide to take task.
Sure, and you're erring on the right side of the line in so far as even if you're wrong, HMRC aren't going to take you to task on it because you're paying more tax as a result.
Yeah. Yeah, and well, look, we're a managing agent, so we're VAT registered, but of course our VAT is added to our management fee. Yeah. So, and then the way we treat it is our clients or our landlords are each their own tax entities, and it's their VAT status that affects the guests.
Yeah. Okay, I'm going to close that. It's getting a bit complex, so I'm going to close that now. But I would just add that there's probably a difference between somebody who's renting the property and then renting it and then operating it, and somebody who's acting as a management agent with regard to TOMS. That's some of the tax benefits of doing service accommodation, and some of the tax pitfalls that we've covered as well. So one of the other things that people talk about is if you're thinking of doing service accommodation, what about the compliance requirements of doing it? What about, what do you need to do differently to a buy-to-let, for example, in order to run your apartment or your house as a service accommodation unit? And some things I've got written down on my notes here is planning. Do you need planning permission, first and foremost, to be a service accommodation operator or otherwise buy-to-let? Do do you need a license from the council? And what about fire safety and other matters of operational compliance that you need to do? So I just want to talk about those and cover off some of those points. So if we kick off with planning, generally speaking, the planning requirements for running serviced accommodation are the same as the planning requirements for running a buy-to-let property. And I just need to add a little bit to that. I suppose the two classic service accommodation style properties are going to be an apartment, the two studio, 1, 2 or 3 bedroom apartment, or they're going to be a relatively small house, up to say 4 bedroomed house, let's say. And those are the sorts of classic service accommodation unit types that you would have. What you also see competing for your customers are the large hotels around, and then in those A roads going into every town, all of the old Victorian buildings or Georgian buildings that have got the signs outside saying no vacancies. And obviously they are much larger units. They have, 10 to 20 rooms in them. And they do need planning. And the differentiation between a bed and breakfast or a guest house and a serviced accommodation unit is the fact that you have more than one unrelated guest staying in the building at the same time. So a hotel, a bed and breakfast and a guest house, the guests are renting by the room and not by the whole accommodation unit, okay? And therefore the planning class for that type of operation is known as C1, okay, for hotels and guest houses. And if you're looking at your 6-bedroomed house thinking, oh, well, I could do service accommodation here and I could get 6 different people staying at the same time, okay, who are unrelated, 6 independent bookings, then in order to do that, you will have to go to the planning department and you'd have to get a full application in to change your planning class of that building from the residential standard of C3 to C1, okay? And before you think about doing that, what you might consider is that there are plenty of old guest houses and hotels all over the country that are up for sale who have unsuccessfully converted from C1 to C3, okay? Reason being that generally in valuations, a C3 is valued much greater than a C1, okay? So if you were to think about doing that, you're much better off going up to Scarborough and picking up one of the guest houses or bed and breakfasts or whatever on the front that are for sale. And what you'll find in pretty much every town, that you'll find bed and breakfasts and guest houses for sale all over the country. So if you want to operate an operation of that nature, then buy something that is already C1. Don't reduce the value of your property by trying to change it from C3 to C1, okay? And what you might find is quite interesting is all those bed and breakfasts, they value based on their business turnover rather than the bricks and mortar of the asset. And strangely, they're all got turnovers of somewhere just below £85,000 per annum, which values up to a very, very good deal in most cases. So you've got a little bit of room for negotiation there because the true value of the building, the true turnover of the business is normally considerably higher than what they've put on their accounts. So from a planning point of view, you can take your buy-to-let and you can operate it as service accommodation without any changes in the planning situation whatsoever. Now, again, as we were discussing about tax, similar situation, that planning is something that a council will take a view on. An operator and a planning consultant might take a different view on it. And the only person who's actually going to make a determining judgment on that is the court. and then the Court of Appeal beyond that. And there has been some cases in recent years where service accommodation has been stated to be in a different planning class to normal residential C3. And there's a couple of quite high profile cases in Cambridge where the council won the case in the courts, and that they determined that it was not C3, but it was known as sui generis, which means in a class of its own. So in which case a full planning application was required in order to operate that kind of operation. And of course, the council who took the point would be very minded to refuse such an application. So this is something to keep a weather eye on. But at the moment, the situation is, and is likely to be for the foreseeable future, that you can convert a normal buy-to-let property into service accommodation without any change in the planning class, with at least one exception, which is central London, or sorry, any London borough, not central London, any London borough. In any London borough, you can only operate under C3 for 90 days in the year. Am I right? 180 days or 90 days? Can anyone help me there? Anyway,
I think it's 90 days.
90 days.
Yeah, yeah. So that's restricted. And so people who are operating in London boroughs, if they're operating in compliance with planning law, they will operate for 90 days of serviced accommodation, and then they will repurpose the building for the remainder of the year, normally with a normal AST tenant. Okay. Is there any? I can hear somebody, but not very well. Is somebody making a comment here?
Okay. I think it's background noise, mate.
Yeah, okay, no worries. So that's the situation with planning. Licensing, as you know, that in some towns in the country, you have to have a license, even if you have a flat or a terraced house that you're renting out on an AST. It's known as selective licensing, and many boroughs now are introducing selective licensing. It's a good income generator, but it's also a good way that councils can get proper information on how many landlords are out there, what properties are actually being tenanted by the PRS, and of course, they can then make checks on these properties to ensure that they comply properly with housing standards and health and safety standards. So licensing is something that is over time going to pretty much affect all properties, all normal AST rental properties. At the moment, it's only for certain HMOs, it's only for certain boroughs, which include other HMOs and normal buy-to-lets. So do you need a license for serviced accommodation? No, you don't. To my knowledge, there's no borough that has introduced licensing for serviced accommodation at the moment. And so that's a positive. My view has been for some time, and still is, that all serviced accommodation units will be licensed in the future. I can't think of a reason why it will not be the case, if I'm honest, and I'm very surprised that it hasn't been introduced already. There have been lots of social problems created by this expansion of service accommodation across the country, particularly in areas where the units are very close proximity to normal residential units, in blocks of flats or rows of terraces or leafy cul-de-sacs, where suitcases are being rolled up past your door, you've got parties going on above your ceiling, or you just have unknown strangers turning up in taxis and whatnot from time to time outside your nice leafy cul-de-sac. And there's rightly a lot of resistance to this sort of behavior and this sort of activity. The likelihood in the future is licensing will be used to control the activity and to control what the councils feel is suitable for service accommodation and what councils feel is not suitable. And we can expect to see that in the future. So with your sort of business planning hat on for service accommodation for the future, you're doing your SWOT analysis, and that's certainly one to write down under the T of that analysis. But at present, there's not a problem.
I think they have brought it in Scotland now, though, the licensing. So if you want an indicator of what it might look like here in England, then there's the lead. They've taken the lead. It was a real problem in Edinburgh. Too many Airbnbs, and a lot of very disgruntled locals.
Brilliant. What I'll do is I'll dig out something on the internet for that and put a link in the YouTube video in the comments section so we can have a look into that. But again, thanks for that, Graham. The other area of compliance, and I'll send again a handout to you all by email after this, is that there are fire safety requirements in service accommodation, which go well far and beyond that of a normal buy-to-let. The government have issued some very good documents on this, and basically my advice to anybody who's doing service accommodation is don't try to do it yourself. Appoint a fire risk assessor who will charge a couple of £100 to go around and do a fire risk assessment on your unit, and then just comply with the requirements of the fire risk assessment. But you will find that things such as, fire alarms being put in, emergency lighting could be required. Things that you would expect to see in an HMO, and maybe a bit more, I would say. And basically, the way that the fire risk assessors look at this thing is that they see a big difference between service accommodation and a normal buy-to-let. Insofar as when you're in a normal buy-to-let, it's your home and you are expected to know the way out in the middle of the night in a fire. You've got muscle memory that will teach you how to get to the top of the stairs and go down them. Whereas if you're in a service accommodation unit and that happens to be your first night there, and particularly if you've got a skinful of drinks, you might go in the wrong direction in the event of a fire. So the regulations and the people that write the rules are recognizing these facts and making sure that we as providers give as much guidance and help for people to get out in an emergency. So you'll find that there are a lot more onerous considerations for doing service accommodation units as they are for normal buy-to-let properties. So those are some of the compliance issues. Just a quick mention about rates and council tax. Obviously, if you have a buy-to-let property, the tenant is responsible for paying council tax. It's not something the landlord needs to really worry about. If you have an HMO, the landlord pays council tax. And obviously, that's a cost to running an HMO. With service accommodation, you are actually running a business premises, and therefore you are liable to business rates and not to council tax. There's a lot of people who talk about whether or not they should choose to have council tax and whether they choose to have business rates. And depending on your situation, where you are in the country or whether you're in the center of a town or further out, the rates for your property could be higher than your council tax, or alternatively, the rates for your property could be lower than your council tax. And further, the rates for your property could be zero, and I'll come on to that. But actually, again, we come back to a theme we were talking about earlier. It ain't your choice. Your property is either liable to rates or it's liable to council tax. The choice is whether or not you actually do anything about what is the status quo. So if you're receiving council tax bills and you're paying them, and you say nothing, the chances are that that's going to continue. If you're receiving rates bills, vice versa. But if you're converting a property from a buy-to-let into a serviced accommodation unit, you would expect to get a council tax bill. What I did in my situation was I literally wrote to the council, sent them a bill back and said that this is a commercial premises and it's no longer liable to council tax, and please could you delist it? And within a week I got a credit note to that bill, and a letter acknowledging that it's no longer subject to council tax, and they delisted it. It wasn't long before I got a letter from the valuation office to say that they were sending somebody around to inspect the building and actually value the building for rates, which they did. And then following that, I had a rates bill. And on the back of the rates bill, I had a form that said application for small business rates relief. And as a small business provider, I was able to make that application to get small business rates relief. And then I got that rates bill credited down to zero because I have small business rates relief. Now, if you're going to be an operator of many units, you will not get that small business rates relief. And as you grow, you will get the relief down to zero on your first unit. And as you add more units, that relief gets less and less, up to a point where there is no longer any relief. So if you're going into this seriously, you will need to consider the business rates implications of running a service accommodation operation. Okay, quick break for any questions at this point. Has anybody got anything to add or anything to ask?
Yeah, just to back up your point on the fire risk assessments, before I got into this business, I was a fire alarm engineer, so I was probably more qualified than most people to do a fire risk assessment. And anyone's legally allowed to do them these days, but I don't do them, and I don't think anyone should unless you really, really know what you're doing. And the reason is because the buck stops with the fire risk assessment. It's everything goes back to that. So if you do have a guest that is injured, maybe smoking inhalation or anything like that, it's all going to come back to what is on the fire risk assessment. And yeah, you just don't want that hanging over you, I don't think. So yeah, do it right and get a third party expert in.
Yeah, I mean, I can't back that up anymore. And it shocks me how many people sort of saying, has anybody got a template for a fire risk assessment? I mean, how on earth can somebody who's had no experience in that do an accurate fire risk assessment? I've got absolutely no idea.
People's lives you're messing about with, it's just not worth it. Saving 200 quid.
So we talked about some of the plus sides and some of the downsides. I've got another downside to add now, I'm afraid. A lot of people like to leverage their investments, as we know. You know, they want to get a £200,000 property for 40,000, and why not? With buy-to-let, where 75% is a norm, you can push it to 80. If you play a game on residential mortgages and things like that, and you're first-time buyer, you can get as far as 95. It's not allowed by the bank, but people do it. So the thing about service accommodation is it's not so easy to get a mortgage. There are some people out there, mortgage lenders out there, who are actually advertising that they do service accommodation lending, and they will lend on service accommodation units. So it's not impossible to get a mortgage, but you will be seeing interest rates upwards of 6% on those mortgages. And also, if you had no experience, they probably would not give you a mortgage in the first place. So they're cautious. I can't really, I've asked mortgage brokers why. I've never had a proper reason why. For me, the income is so much greater than the buy-to-let, and the fallback option of buy-to-let to me, is always there on a service accommodation unit. If the unit is good for service accommodation, then it's almost certainly going to be good for buy-to-let as well. So it seems to me that there isn't a logical reason why the banks aren't throwing money at you for doing service accommodation. However, I do believe that, you know, some of the things that Yuliya has covered up earlier, the fact that it's a trade rather than an investment, some of these hard facts, if you like, change the way that a bank would look at things for lending purposes, and I think that that's the problem. It harks back to the history of lending as opposed to any logical explanation that we've got today. But finance is hard to come by, and that's something that would need to be considered. Abora.
Yes. How would you ask for a mortgage then? Would you call it different, or to get it more easy?
Oh, I see. Well, I would say that there are a lot of service accommodation properties that are mortgaged at the moment on standard buy-to-let mortgages. Okay. It's not legal. Well, I say it's not legal. It's an issue of contract between the mortgage company and the individual. So it's unlawful rather than illegal, insofar that the mortgage company, if they had a problem with you breaching their terms, they are likely to issue a letter of cease and desist, which will probably give you a period of time to change your operation back so that you're no longer in breach. But that's their choice. They could choose to call him a loan. They could say, look, you're in breach of our terms and conditions. I'm giving you 30 days to pay the money back. Ultimately, you ain't going to derive a successful long-term business on the strategy, on the basis of an unlawful situation. And certainly it ain't a business you're going to be able to sell on to anybody else, because obviously if somebody wanted to buy your business, when their lawyers looked at it, they would just look at the compliance element and they say, well, actually, these are in breach of the contract. So you won't have a saleable business if you were to do it in that way. So how can you do it otherwise? I mean, yes, you could look to get these more expensive mortgages. And frankly, a well-run operation would actually net you more profit, even with that mortgage, than a buy-to-let situation would. And remember, coming back to what Yuliya has said, is that you would still be able to reclaim against tax all of that mortgage interest that you're paying, whereas the buy-to-let operator can't reclaim any of it against tax, but then gets a 20% credit for the benefit. So there is a tax situation to consider as well. So if you are going to do it properly, if you have got some experience and you are prepared to pay up to about 6%, then there are mortgages available and you can leverage up in order to make this happen. I would say with the majority of cases where people are operating it on buy-to-let mortgages, these are the cases of rent-to-rent or management, where basically it would be a buy-to-let landlord that's getting a little bit tired of what he's doing or she's doing, and somebody has come along and said, look, I'll give you guaranteed rent and I'll run your operation for you. And they say, that sounds good, I'm just going to take the armchair money. But of course, these people would normally have buy-to-let mortgages. But because they're not doing the operation, the agency or operator, there's a disconnect here. And I do know of at least one situation where one of those armchair owners has actually had a cease and desist letter from the bank. But I only know of one situation where that's happened. That was down in Crawley near Gatwick Airport. So the other ways of dealing with this, of course, is to look at alternative funding. And this is where the emergence of peer-based funding, funding by pension funds, for example, although pensions can't lend on residential units, and they're very nervous about lending on serviced accommodation because of the interchangeability of purpose. They're nervous that they are allowed in law to lend on serviced accommodation, but if the operator was then to change it to buy to let, then that would be a really big problem for the pension in that situation. So I think pensions are perhaps not the best place to look, but the likes of Shane and all his massive network of investors that are out there, some of whom might be happy to take 4.5% per annum over a 5-year period. Who knows? What do you think, Shane?
They're everywhere, those people.
Yeah. So yes, access to finance is an issue with service accommodation.
It's getting a little bit easier now. So certainly when I came into the market in 2016, 2017, the only products were traditional holiday home products, and they really were like 7 or 8%. So now, I mean, I can't ever try and get away with it, and I wouldn't. I mean, as you can probably tell, I don't like flying under the radar. I like to do things properly. And yeah, it is. If you go and get a buy-to-let mortgage with the absolute intention of running it as a short stay, it's just mortgage fraud, and you get a little black mark next to your name. And if you're planning on being a successful property investor, it's probably a thing that you don't want. However, I mean, there's a guy I know, I'm not going to name him, but he's a very legit guy and also wants to do everything right. He advises people. He's got 17 serviced properties, short stay, and they're all on buy-to-let mortgages. And he's checked his terms and conditions, and they were old buy-to-let mortgages before this wave of Airbnb came, and they didn't put it in their terms and conditions. And he didn't get those mortgages with the intention of running them as short stay. So, I mean, he doesn't mind standing on stage and telling everyone this. So, you know, he just has found a way of making more money with those properties. So he's moved them all over, and he's been running them like that for years and not had an issue. So, but yeah, tread carefully for sure. So I bought a place end of 2019, and that is, I think it's I've just tried to find the mortgage offer. It's 2.5 or 2.8%. And that is with me allowed to run it as either short stay or as a buy to let. And that's with Foundation Home Loans. Their only condition is that you've got 2 years experience. So maybe get a rent to rent for 2 years, get the experience, prove it, and then they'll be open potentially.
Graham, was that through a broker, or can you speak to them directly?
Yeah, I went through a broker. I always do. I'm not sure about going direct.
Yeah, okay, that's really quite interesting, isn't it? And that's a really good pointer. Thank you for that. I might take it up myself. On the flip side of that, my unit is unencumbered, which means I don't have a mortgage on it. And you know, when you're getting a little bit longer in your teeth with your property investment career, you know, you might have enough money to be able to buy the odd property without getting a mortgage on it. And one thing that's very useful to have an unencumbered property such as this is that if I want quick finance for a development or some particular project or whatever, I can get bridging finance that is charged and secured against my serviced accommodation unit. So it's not the end of the world if you're able to get to a point where you can have an unencumbered unit. It's always a good thing in a portfolio to have 1 or 2 unencumbered units sitting there for the rainy day. But of course, you know, I do appreciate that's something you have to build up to. You can't magically make that happen if you don't have access to the finance. One other point of compliance that I should cover is the issue of leaseholds. And we've already talked about some of the issues of antisocial operation and people living in flats and doing serviced accommodation amongst residents. One of the things about Edinburgh, Graham, which was interesting that you mentioned it, is that Edinburgh has always been a city where residents have lived in tenements, you know, for all of their lives. And Edinburgh as a city has a very, very large number of residents living within the city itself, as opposed to sort of them being outside of the city. It's quite a feature of Edinburgh. And many of these tenement buildings have passed down through generations and generations. That people who are living in them might say that their great grandparents bought that, and so they've all grown up through generations in these apartments, these very grand, large apartments, a lot of them, which are perfect for service accommodation. And of course, Edinburgh every year has a month-long festival in August, and so there's a massive peak in demand for short-stay accommodation that takes place in Edinburgh. So it's really an interesting study into, if you like, the social problems that occur when one of these tenant neighbours who has been your neighbour, or their family has been your neighbour for generations, suddenly sells up, and then the buyer is just putting different people in every week. So a lot of flats, and I'm talking about the whole of the UK now, are leaseholds. Most flats are leaseholds, which means that basically there's a freeholder owning the ground, the block of the flats and everything else, and is managing all the communal areas of the flats. And there's a leasehold. And when you actually buy a flat, you don't buy it, you actually lease it for a period of time, 99 or 999 years. You're seen as the owner, but actually you're the leaseholder. And you've got to comply with the terms of that rental agreement, ultimately, that lease. And you'll find that in many situations that there will be clauses in there against running businesses from the unit, generally not aimed at working from home, more aimed at customers coming in. But nevertheless, the wording of them might be broad enough to encompass both situations. And also, there could be clauses against subletting. Okay, so if you are looking to buy a flat and you think that it's perfect for the service accommodation unit, then you will need to look at the lease, and you'll need to look at the terms of the lease very clearly. And you really want to be avoiding an argument. So even when you are strictly legally correct to the terms of the lease, what you don't want is the freeholder to be writing to you to say that this is against the terms of the lease. So I think you've got to be fairly transparent with the people, the other stakeholders in your situation about what you're planning to do to ensure that there's not going to be resistance after you've made the investment and gone down the line. Good. Any questions before we move on? Shortly, I'm going to bring Graham in to talk more about his situation. But I think before that, I think we should talk about determining the market viability. It's all very well for us to think about service accommodation, and this is going to, you know, convert by buy-to-let into 3 times the income and everything else. But will it work? And I think that that's a question that we should be really asking. The upside down decision making of many property investors in all strategies, in all areas, it seems to me that they look at a property and they see the property for what it's in, for its functionality and everything else, and they say, you know, that's brilliant for this particular purpose. It might have large rooms, good car parking, bins, you know, close to a train station. This is a perfect HMO, without even considering who the market is or whether there's a market there in the first place. But of course, we're all in business here, and the first rule of any business is you've got to look at your customer. You know, it's all very well saying that I want to do this, but if you put a pod on the moon, it might, you know, it might win you some business awards for your achievements technologically and everything else. But Even if it's got parking, I don't think you'll get too many customers in. So it's really important when you're looking at serviced accommodation is you need to look at who your customer is, where your customer is going to come from, why your customer wants to stay there. The customer differs considerably depending on where the place is. And it could be that you're in a particular area where you're going to have to fight very hard to get the customer because there's loads and loads of other people doing it. So it might be that you think it's the perfect place because it's right next to an airport. Well, my experience of Birmingham Airport is that it's probably the cheapest place you can stay, unless there's a conference on at the NEC or an exhibition on, in which case it's probably the most expensive place you can stay. So you've got to know your market. Who is going to be your customer? Generally speaking, your customer is going to break down as to be a blue-collar trade contractor who's probably going to stay with mates, or work colleagues, should I say. And they're going to have a vehicle, and they're going to have some pretty expensive kit in their vehicle. Okay, so that's one midweek customer that you're generally going to attract, but you ain't going to attract that in the middle of North Wales or South Wales. Okay, you are going to attract that in areas where there might be a large institution that requires lots of maintenance and work, like a university, hospital. You're going to attract that where there's big capital projects going on, lots of building and construction going on. So you need to look at, is that a customer that you're likely to attract? And in which case, that's going to have a big impact on how you actually design that service accommodation unit and how you're going to price it as well. On the other hand, you might be by the sea in a lovely sea view apartment, in which case you know that your customer for that one is going to be the weekender, the holiday maker. And therefore you'll be looking at how you actually design and how you organize that for more of a leisure situation. One of the obvious things that comes to mind here is whether you put double beds in or whether you put single beds in against those two different customer groups. Many places will have a hybrid of the two, and you've got to actually cater for both, and that's a very lucky place to be. If we take something like York, for example, during the summer, you've probably got, I don't know, a 7-day trade of holiday makers. And during the winter, you've probably got a weekend trade of holiday makers and a weekday trade of contractors. But then again, you've got to consider that there's going to be a lot of people there fighting for that summer trade. So during that winter time, you'll probably find you're going to have to fight a lot harder to get the customer because there'll probably be an element of oversupply during the week. So you need to really consider carefully who your customer is. Graham, can I bring you in here? Can you help me with some other customer types?
Other customer types? Sorry, Rupert?
Yeah, and if you can't answer, then that basically is it, isn't it? Yeah. Professionals, where I am in Loughborough, I sometimes get postgraduates that will come for, say, 2 to 3 months at a time. I did get a postgraduate, 2 lots of postgraduates that seem to have a week on and then 2 weeks off and then a week on. So they'd only have to come to Loughborough for that week. And then everything else was home study for 2 weeks, and then we're back for a week again. So there's that kind of situation as well. And then the other thing I've got in Loughborough is I've got graduation weeks, which I tend to sort of keep closed until nearer the time and then open them up, very expensive. And I do tend to get overseas customers coming into the graduation weeks from that point of view. So yes, there might be areas where the wedding trade is a good trade for you as well from that point of view. So yeah, really do consider who your customer is, and that's going to drive whether or not your unit is viable, and also how you're going to design your unit, because the most expensive coffee machine that takes 10 minutes to do the best possible coffee in the world might be perfect for your weekender, but your contractor that needs to be on site at 7:30 in the morning is not going to get any benefit from that.
Well, these builders these days are getting a bit more fussy. You're getting organic salad in the fridge and stuff these days. It's not like it used to be. I mean, my best tip really is just for knowing the viability. Is there any hotels nearby? You know, they don't generally survive if there isn't a market for short stay guests.
And I also think you should see that as your customer competitive situation as well, because ultimately your customer has got a choice. Your customer can, at the one end of the scale, can drive home, and at the end of the scale can stay in a 5-star hotel with a swimming pool. You know, so you've got to be saying, what is it about your offering that is not only going to be attractive to that customer, but it's actually going to be deemed good value.
Yeah, and that's where the 1-bed apartments can be more difficult to compete.
Yeah,
to compete with the hotels, you know. But you've got your 2 and your 3-bed properties, and you can fit a family in or a group of people. Then suddenly, you know, your cost per person per night gets very, very competitive.
And when we're dealing with workers, we're not normally dealing with workers. We're dealing with an administration in a company that are putting the workers in there. So they're having different considerations to the workers. So the workers might be really happy to go to a bed and breakfast or a hotel where they get a full fried English breakfast put on their plate in the morning. But of course, that might be more expensive because they're being charged per person per night for that particular situation. Whereas what they're thinking is, what the employer is thinking is, well, look, I've got 4 of them there. They've got to be there for 4 nights. If I book this flat, I can put them all in this flat and I can give them an allowance every day, and they can go to Tesco and they can buy their food, or they can go to the pub and they can buy it in the pub, but they're not going to spend more than that daily allowance. So it can be considerably less expensive for the employer to put 4 people into a flat for 4 nights than it can be to put them into a hotel for 4 nights. So these are the considerations that you need to have when you're looking at your market. The other thing in terms of market viability, and particularly in budgeting your pricing and how much you're going to earn from this, is that you can go on the main booking channels, which are basically Booking.com and Airbnb. All the others fall into a completely different league in terms of popularity, but those 2 are by far the main players and far way ahead of all the others. You basically can look far into the future and start looking at the types of comparative accommodation that you want to price up and start to look to book that for yourself. And then just note, how much is it for a Monday? How much is it for 2 nights stay from a Monday, 3 nights stay from a Monday? Okay. And then how much is it on a Friday over a weekend from that point of view? What a lot of operators do to protect themselves is that they will have a minimum of 2 night stays. That does give a little market edge for people who are prepared to stick their neck out and go for a 1 night stay. And I'll come on to that a little bit later as to how you can do that and not lose money. So you literally, and then you come back to 2 weeks' time and you try and book the same for 2 weeks' time, and you see what the price differential is. Because one of the things that Booking.com particularly try to do to owners is to get them to reduce the price if people book last minute. So you'll probably see a big price difference if you're looking 4 months ahead to if you're looking 2 weeks ahead. The other thing of looking a year ahead is you need to check how many units are there advertised within your area, okay? And then look a couple of weeks ahead or 4 weeks ahead and count the number of units that are advertised for that day then. And if the number of units significantly reduce between those two searches, then you know that there's strong popularity there. That basically you see the whole of the available market when you're looking a year ahead, okay? But you're only seeing what is not booked at that moment in time when you're looking 2 weeks ahead. So that's another way to determine the market viability and also start to look at what sort of pricing you can expect to achieve. With advertising the property, the utopia is to get your direct bookings, either from the individuals or to get them from companies, okay? And there are certain ways that you can achieve that. But when you're setting out in doing it, you should set all of your budgeting and everything and start your operation making use of these channels, Airbnb and Booking.com as a minimum. Basically, you would pay 15 to 18% commission to have these bookings from these channels, these online travel agencies, OTAs, which might seem a bit expensive. However, I would say that that commission actually nets down to about 10%, because for everyone that books on those channels and then comes back for a second stay, they will always book directly with me for the second stay. So I don't pay the commission on their second stay or their third or their fourth stay. So obviously Booking.com and Airbnb are fully aware of that, and they price their model in to expect that to happen. But the positive sides of using Booking.com are such that my apartment's called Fab Apartment, it's in Loughborough. Somebody in Hong Kong might type into Google accommodation Loughborough, and number one can come up, Fab Apartment, on the Google search. Now you can imagine how much money I would have to pay and how much time and effort I would have to get in to achieve that on my own. But because I've got mine booked through Booking.com, that is an experience that I've had. So they might be charging quite a lot of commission, but they're also earning it. So when you're kicking off, the very least is to use Airbnb and to use Booking.com. There are literally hundreds more OTAs that you could use. And if you were to use them, you'll probably find that 95% of your OTA bookings come from Booking.com and Airbnb. And of all the hundreds would make up maybe another 2 to 3% of your total bookings. So those are the two main ones. Now I have got somewhere, I think, I'll just have a quick look, see if it's there. Let's see YouTube. I might bring it up later if I haven't got it to hand now. No, somewhere I've got a screenshot that I'll bring up to you of something called a channel manager. Okay, and Graham is going to talk to us a lot more about channel managers in a minute. But what channel managers can do is they can basically go out to hundreds and hundreds of these online travel agents all at the same time. And when a booking comes in, you don't have to then go and amend your availability with all of them. The channel manager does it for you, and it amends the availability for every one of those. It does a lot more, but that's the headline really of what a channel manager does. But I'm not going to take away any of your steam. Graham, would you be able to come and tell us a bit more about this and about what you do,
yeah,
and about your new innovations?
Yeah, we've got a couple of innovations in the space. I actually have, I'll give you a bit of background to start with, I guess my journey so far, so it makes a little bit more sense, and then we can drop into the technology. But yeah, as I mentioned earlier, I was an engineer for many years, and we did do Airbnb when it was relatively new, from a spare bedroom. And Yeah, it was okay. I wasn't a big fan, to be honest with you, just having strangers in our home, but we were just looking for additional revenue streams. So one of the great things was that you could put a lot of control measures around what kind of guests can book. And so, yeah, I mean, and on that point, you know, that is, Airbnb have done a great job of getting a lot of people into what we call service accommodation, but it's not new at all. It's been around since the 80s. In fact, sorry, it's been around even longer than that. There's a company that called Oakwood, and they got going in the 60s, and they've just gone bust, sadly, through COVID. But yeah, they were the oldest service accommodation company in the world. So it's not a new thing at all. Airbnb did make it new for many people. And one of the great things was that you could put a lot of control measures around who was staying. Anyway, roll forwards a few years, I got a buy to let, and I didn't even know about this thing called property education or networking events or anything like that. And I ended up at one, and there was this guy there doing serviced accommodation, and I immediately thought, right, I love the sound of that, taking, you know, essentially rent to rent other people's properties and renting them out. And I got a block of 4 units. It's the one that we were trying to get through on Tom's, and we made it live and we hit the ground running. It took 9 months to get the units off of the landlords, convince them, you know, business plans. We really went to town on it. I got good advice. I was getting educated wherever I could, and, you know, doing the courses and everything. Finally got it over the line, and we were hit the ground running. We were like 9.8 on booking.com and doing well, and I still had a job, and so I needed to kind of run this block of 4 apartments but also have my job, and I needed to do both. And I wasn't making enough money from the apartments to give up the job, and so yeah, I created a bit of a basic system, and I got my first employee while I was still working, and actually I ended up growing the business to almost 20 units before I gave up the job. And the reason was because I never intended to kind of go from having a job to owning a job. I wanted to go from having a job to owning a business. And so, you know, and that a business would have team members in it. So actually I did build a team whilst I had a job. And ultimately though, every evening I'd be able to keep an eye on things during the day, but everyone knew what they needed to do because it had all been mapped out, all of the process of how to get a guest in and happy and the apartment cleaned afterwards. So we every 5 p.m. every evening though, it would all land on my lap, and actually still be getting phone calls from guests, and I needed to know, you know, who was where, what had been done, what hadn't been done, what are we waiting on. And so I kind of created my own system, and eventually I went and got mentored. And my idea in the early days was, because this system was great, by the way, it really enabled us to all hand over without a manual handover of just what work was going on and what was needed. So we my grand idea was to go and be a consultant to other short stay businesses and give them this system and show them how to do it so that they could delegate more easily and run a team. And thankfully my mentor at the time said, no, don't do that. That's your IP. That's really special. That's what makes you guys unique. And it's the challenge that everyone else is having, but you need to retain the IP rather than giving it away through consulting. So roll forwards, myself and that mentor started a business together, a software business, and that was 2 years ago. And someone else advised me, don't ever start a software business. I ignored him, but I'm going to say to all you guys, don't start a software business. It's really hard. But yeah, we are almost there. We've got a beta product out now, and it's got 30 separate businesses on it. And it's essentially, it enables those guys to delegate and to run a team and to ensure that all tasks are done effectively. There's no duplication of work or anything like that. So Rupert alluded to a channel manager, and yeah, most decent short stay operators have them. It's almost an essential tool. I do know that there are successful people that are running good businesses and they don't use channel managers. I'd say they're a little bit more old school. You know, they're just doing things on a piece of paper and putting lines through it and having to manually go and update availability everywhere. You're just massively prone to errors and things going wrong, I think, when that happens. Like automation just essentially removes that margin for error. So yeah, Channel Manager, it just automates your rates, it automates certain messages, it automates blocking your calendars. And of course, you can then plug in other things like revenue management tools so that, you know, to get the rates that you want in the future, it will be looking for those busy dates, and that would be injecting those prices into your channel manager, and then channel manager will be pushing it out to all the various channels. So there's loads of channel managers out there, there's hundreds, and they've all got pluses and minuses. Some are very expensive. So what we find is they're all very functional, but they're not great when it comes to actually running the business. And that's why we've built this companion app, and it plugs into channel managers, and it essentially just takes care of everything that channel managers just don't in short stay businesses. So yeah, that is where we are at. I mean, roll back to the growth. I had the rent-to-rent units, by the way, and everything I was building, all of these systems and yeah, processes, everything, it was all about being scalable. That was the word for me. It was just like, it's got to be scalable, and rent-to-rent is just, in my opinion, not scalable. It's just not a scalable business model. You're taking on a heck of a lot of liability. You can imagine it, like, so that block of 4 units, I think the liability I had on that building was about $3,000 a month almost. So, you know, times that by 10, it's serious money. And I've been, you know, ever since I had that unit, I'd talk to anyone. I'd always talk about black swan events, the things that you don't know that are coming. And of course, then COVID hit, and anyone that hadn't moved over to business rates didn't get the grants, and suddenly they've got no guests and they're still liable for everything. So they didn't have it. It wasn't scalable. So that's why we decided to go into management. So we make less per property, but suddenly we had scalable systems and a scalable business model. And so, yeah, we did scale it.
Could you just help us a bit more? The difference between rent to rent and management. We have alluded to it, but we haven't actually clarified that to the group. Yeah.
Okay, cool. Yeah, so rent to rent is Rupert's got a nice 2-bed apartment in Nottingham city centre as an example, and AST rent would be, say, 800, 850. And I would say to Rupert, actually, can I rent that from you, please, for 5 years, and I'll look after maintenance, and it'll be kept nice. I want a slight discount on that rent. And, you know, if we could negotiate that down to 725, you know, and that's generally where rent to rents are. I mean, interestingly, that's how it certainly used to be encouraged. And I think now, because the market, well, so, you know, pre-COVID, the market started getting very, very saturated. There was a lot of people going through doing the SA courses, and they were all being taught the same thing, and everyone was going after these rent to rents. And in fact, the last guy I heard that was doing it in Nottingham, and he'd got to quite a big number before he went bust, he was offering more than the AST rent just to convince the landlord to do it. But then you're taking that as a liability. All of the income then is yours, and so you can make good money. You can make very good money doing it. But yeah, you are taking on the liability of the building and the rent and the bills and everything. Management is, I would say to Rupert, actually, instead of me renting it from you or a rent-to-renter doing it, actually, Rupert, you should have all of that income and all of the tax benefits that come with it. And I will do it for you. I'll manage it. I'll facilitate that. So you just hand me the keys and I'll send you money once a month. It's going to be a variable amount. There's no guaranteed income. But then we will set up a client account on the back end of things, and we will be invoicing guests on Rupert's behalf. They're his guests. They're not ours. It's his tax status. And when the cleaners are cleaning his property, we will have those guys invoice Rupert, and we will be paying them on his behalf. And each month we settle the account. And by the way, before we settle, we take our management fee, which is a percentage of that revenue. So it's a great, I love the business model because there's a nice alignment of values there. The more money Rupert makes, the more money I make. And you know, if it's not viable, if it's not viable for Rupert, it's not really viable for us either. So it's a nicer way of doing it. Of course, then our tax status doesn't affect the guests. It's Rupert's. So we can grow and scale as we did to 150 units, and actually I think all but 3 of our units were there was no VAT. It really does kill the business model, to be honest with you. So yeah, that's the key differences. Does that make sense?
That's great, Graham. So what's your new project that is going on at the moment?
So I've mentioned the software. That's currently on a private beta at the moment. We're going to be launching that in Q3 this year. So and so that will be not only the Channel Manager companion app, as I alluded to, that will enable teams to do all of the tasks required, getting the payments, getting the ID from guests, getting them to sign the terms, getting the deposit, making sure that's held correctly, sending access instructions, answering any messages, having the guest portal where there'll be local information and property information. That's that companion app. And we're also building a finance dashboard, because there isn't a decent one in the industry. And so where you can really, it's going to connect to Xero and extract all of your information from there, but it will connect to your channel manager and it'll pull all of your booking data as well. And it will really enable service department operators to start seeing, a real breakdown of their costs and what is profitable and what isn't. And that is one thing, that one key benefit management is it's not our money. So we have to treat it very carefully. We have to, we've got full-time bookkeepers, and then every bit of money that's going through is properly reconciled. Whereas I think when it's rent to rent, a lot of people they're just like, well, it's my money, I'll just shove it in the account. And it's, it's not really, there's a lot of people that do SA and they'll do it for 18 months. And that's about when they've had to do their first accounts, and they think there's lots of money and they've made lots of money, but actually by the time they do their accounts, they realize it wasn't worth the amount of time it took. So a lot of people will stop doing it at that point once they've done their first year accounts.
So is there a brand name to this beta version, that we should look out for?
So, yeah, guest flow. We're trying to create flow state. We just want businesses to run in flow state. That's the ultimate goal here. One of our mottos is, the more proactive you are, the less reactive you'll be. And in this industry, you end up being very reactive. You can be very reactive and having to deal with putting out fires, and you've got a guest complaint, and now you've got all of these things going on. And it's just where there are so many spinning plates. I mean, we mapped out the perfect guest journey in a flow diagram. There's 76 steps to getting it right. And so, that's complicated. If you've got different team members on at different hours, all responsible for different things, and maybe you had a guest book 8 months ago and they're arriving today, and you've also got a guest that booked an hour ago and they're arriving today. It's prioritizing the work. So that's guest flow. We've nailed that, and we've basically built in industry best practice, and that's why we've got these 30 beta businesses on it, because they're in different parts of the UK with different property types, and we wanted all their feedback and we wanted to make the product better. So it's been refactored at the moment. It's going to come out in June, and then further to that, we did a bit of a pivot. So we had, like I say, we had 150 units at the peak, and then COVID hit, and we had 90+% cancellations, and we had a lot of nervous landlords, understandably. And I was encouraging landlords, if they had a viable alternative, to go for it, because there's so many unknowns. And then the hotels got forced to close, and we didn't, because we don't have public spaces. And so and we were helping out the NHS and whatnot. So the business was saved, but we were a massively reduced number of units. I think we went down to about 60, 65. And I spent 20 years on call out. I was an engineer. I had to go out in the middle of the night to deal with alarm systems and stuff. And I just said, I'm not willing to go on call out again. I don't want to do it, So I needed and by the way, to have 150 units, you've got to have a 24/7 call center team, and they were using our software. So we just decided, I just wanted to justify keeping a 24/7 team. And yeah, I mean, I read the words that, successful pivot. And I know it's a word that's been widely used last year. Sometimes people were quote unquote pivoting, but just going after completely different business models, which is fine. Everyone had to do what they needed to do. But for me, a successful pivot is reutilizing your existing assets. And so we already had 24/7 team, and we already had first mover advantage on the software. So merging those two together, we know guest management is a major problem. And this 24/7 nature and the out of hours distractions, shall we say, is a big problem for a lot of small short stay companies, whether you've got 2 units or 20, or, you know, I think the guys that have, you know, going above 40, 50 units, they generally have got it sorted by then. But getting the commercial balance where you might have enough units to justify getting a part-time member of staff or full-time member of staff, it's still, you need kind of then need more units to get the profit you were making before, but then you still don't have someone full-time. And inevitably, it always falls back on the business owner to deal with guests in evenings and weekends. And that's fine when it's new and exciting and it's your new business. But of course, after a few years, it can weigh you down. So the pivot was, hey, we've got the ultimate guest management team that really know what they're doing, and we've got software which enables us to deliver that service white label. So we've now got 2 other businesses on that. One, a great one in Bournemouth with really nice high-end stock in Bournemouth, and Paul and Sandbanks. And then we've just got a reasonable sized company in Oxford as well. They've got 35 service departments. So as far as their guests are concerned, they're dealing with those companies. It's, you know, they're not dealing with Prim short stays. And so we've branded this up as Guest Help. And yeah, and that's essentially the big drive for us at the moment, is, and it enables us to roll out nationwide, for us to deliver a really good hands-on management, end-to-end management service for Rupert's property in Nottingham. It's got to be local. It's got to be our cleaners. We've got to use our maintenance guys. We've already got the linen store. We can do a really good job. So we don't do local operations for these companies. They've already got those nailed. They've already got a property manager. They've already got their cleaners. They'll be auditing the cleaners, making sure they're doing a good enough job. They'll have their linen and their stock control already sorted. But it's the 24/7 guest-facing things they can't necessarily handle. And so that's what we're doing now. And that's what Guest Help is.
Fantastic. So you heard it here first, everybody. When guest flow lists on the AIM market, you know, and not only invest in
5 years, mate.
yeah. So that's fantastic. And I know we don't see a great deal of you on Unity, Graham, because I know how busy you are with all of your activities and everything. But thanks so much for coming on and sharing all that with us today. That's absolutely brilliant.
Yeah, no problem.
And later on this afternoon, we've got another management company. Dan Cheetham's going to come and tell you about his company and what he does. But what's mentioning investment, what he has got a really interesting angle on that is how people can actually invest in, not necessarily his company, but can invest in his operation on a cash and cash type of investment, where people can actually invest cash and get a return on cash, which is a really interesting concept that enables Dan to scale his business up much quicker without having the cash flow limitations that many businesses have. So I think that's definitely worth hanging about for, if to hear what Dan's got to say. We've not got a great deal more on the agenda. So where are we now? We're sort of 6:20. I think we're going to probably go on until about 7:15 or something like that. So I'm just going to go on. Dan, do you want me to bring you in now? I was going to go through something first, but
that'd be absolutely fantastic if I can jump in now. Yeah, please.
Yeah. Okay. You are.
I'm just in between running a site, so I'm parked outside the site, unfortunately. And is the signal okay?
It's
super.
We'll see how we get on. It did trip up a little bit just now, but we'll see how we get on. We'll bring you in now because obviously you're there and you're parked up and everything. So basically, Dan, just tell us what you're doing. I mean, we've heard from Graham what he does. You also have a management company, don't you?
That's correct, and it evolved in a pretty similar way to what Graham's does, but we're more in our infancy than what Graham is. So we initially took out a number of rent-to-rent contracts ourselves, and I'm in a similar position to Graham. I agree that it's a tough thing to scale. As you say, with black swan events such as COVID, it's quite a daunting industry to be in, to take on such a great amount of liability. So we have a business called R&D Rent Guarantee. We're based in Stoke-on-Crewe, which should really be called R&D Management now, as we're a management service. And what we're doing is we're sourcing rent-to-rent contracts for a number of investors that are looking to get involved in Rent to SA, but want to be completely hands off. So we're offering them a solution to be able to enter into SA with a reasonable understanding, but we do all of the legwork. So we source them a Rent to SA contract with a buy-to-let landlord very often that wants, again, to mitigate their liability, avoid any of the tenant hassle. We agree a term, generally of 5 years, with break clauses that suit both parties. And they invest a small amount of cash up front. This can be anything from a couple of thousand just for a sourcing fee, as the property can be nice and furnished, or probably up to £10,000-12,000 if the property needs furnishing. And what we're really aiming to achieve is just an opportunity for people that are looking to invest this type of cash and generate a larger return than what they could do elsewhere. So they are balancing their risk with taking on the liability and the expenses of running the property each month, but they are also experiencing at the moment a much greater reward from the cash flow. So as Graham described, we are just taking a management fee and then providing all of the services to these investors who are looking to get involved in Rent to SA.
Oh, that's fantastic. And I know you've got, what, 8 or 9 units on now or more, have you? And you seem to be taking one on a week or something at the moment.
Yeah, so we're aiming to take on at least one a month at the moment. We're at 9 units now. We've got the 8 in the pipeline. So we started, I think, initially through COVID, we probably only had about 4 or 5 Rent to SA units. So through COVID, we've still managed to grow. The customers that we have are still looking to take on more units with us. We've got clients that are looking to take on one every month for the next 12 months, new clients approaching us. But the pipeline at the moment is to take on approximately 8 more units as well.
So for every unit you take on, I know that you don't own the unit, you're only doing the management for the unit, but you're not asking the owners themselves to turn the unit into an SA. You're doing that, aren't you, with your money, or at least you're funding that?
We're not funding the furnishing or the setup of the property. The contract owner is. So there's 2 types of landlords that tend to approach us. These are buy-to-let landlords that have maybe had difficulties with renting to families previously. Their circumstances might have changed and they might be looking to... We met a gentleman today that has 4 properties in Stoke. He's looking to move abroad. He currently runs them all as HMOs, but feels uncomfortable with the concept of handing this over to a HMO letting agency. So he's looking for a guaranteed rent or a solution so that he can move abroad and reduce his risk effectively and have a company in there that's going to be the best possible tenant for him. So the contract owner, the investors that we source to, they then have the setup costs. So they are then furnishing the property, giving it a lick of paint. We facilitate all of this on their behalf. We go out and spec the property, create a schedule of works that needs to be carried out. And then we carry that work out for them. They're the ones that put in the upfront cost. And that, as I say, can range from a small sourcing fee if it's a ready done HMO that's in a good condition, that's already furnished, to maybe £10,000 if we need to furnish a buy-to-let that's in good condition. So that's their upfront cost.
So let's just try to understand that a bit more, Dan. And basically what you're doing is you're saying to an owner of the property, we will give you a management income and we will basically manage it in the same way that Graham has described earlier. Okay, and then obviously you're finding the guests and you're putting them in and you're operating them and everything else. But somewhere in the middle of all that, you're then saying, okay, well, now I've signed that contract with you, Mr. Owner. I'm not going to sign it. I'm going to sell that contract to another person who's actually going to come in with cash. Okay, so you've got a third person that's coming in there with the cash. They are taking, I take it, a proportion of the profits, and you're taking a management fee. Is that how it works?
Almost. So just to be very, very clear, we are issuing a guaranteed rent to a property owner. So generally an ex-HMO owner or a buy-to-let investor. The client on our behalf that we represent is the one that funds and gives them the guaranteed rent. all we're doing is facilitating this entire process for them. So similarly to maybe a HMO sourcer, they source the property, they carry out the refurbishment, and then as a part of the turnkey service, they then let and manage that property. It's very similar, apart from we're avoiding a lot of the costs that are involved with that process, and we're allowing people with smaller capital to get involved and generate a greater return on their cash.
Well, that's a really interesting concept, isn't it? Because if I become that, what I call that middle person, not the owner of the property and not you that's actually doing the work, you're actually saying to me, well, look, you can have the contract with the owner, and you'll sign the contract with the owner and everything else, and you'll furnish the property and make all the changes and everything. So that's going to cost you X. And that, if you like, is my investment, isn't it? So I invest X into this business project. But then I'm then feeding the profit that you're giving me from the operation, because it's me that's owning that contract. You're just taking a thin slice of everything that takes place. Is that's correct, isn't it? So
yeah, so we take our management fee and
yeah. So what sort of investment would one of these contract owners be doing? Because you've said already that these people are leaning on you to give them more and more.
That's correct. It entirely depends on the property and the situation of the landlord. So our general guest profile is contractors, builders that stay Monday to Friday. We're located near to some nice attractions, and we do get the weekend guests that maybe want to visit Alton Towers or some of the theatres, family, relatives, etc. So that really determines the level of furnishing and the level of quality that we need to achieve. But the returns that they're sort of achieving obviously vary because it's a fluctuating income, but generally the setup costs anywhere between a small sourcing fee for something that's furnished through to £10,000–12,000.
So £12,000 is a sort of ballpark investment. So basically you're saying to me, look, Rupert, if you put £12,000 into this investment, what you're going to get from that £12,000 is a contract, a piece of paper, basically.
Right.
Okay.
Yeah.
But that piece of paper then guarantees that you will then keep getting a slice of that income for the duration of that contract, and maybe any renewals that you might choose to do for that contract. Is that correct? Yeah.
Correct. So we sign a separate agreement with the investor that determines that we manage the property for X period. Yeah. For a lot of our clients, that is the full duration of the 5 period. For the clients, that's 6 to 12 months in advance. So we basically sell the contracts based off our previous performance and what evidence we've got. So we look at past data, look at how other properties performing. We tend to take on very similar properties that we already have that are a proven model. And using the information that we have from previous occupancy and a couple of years of experience, that's how we determine or predict what sort of income levels these investors can expect on a monthly basis.
And of course, whilst the income that I get from my £12,000 is never guaranteed, and that's down to the performance, what sort of income would you be saying that, based on your experience, that I might expect to get for my £12,000?
I have a deal in front of me that was a £7,000 setup fee. So that included a £3,000 sourcing fee, and then the majority of that, the rest of that was all furnishing, some setup for linen, etc. Usual SA setup costs. And we based that off a 70% occupancy for them, and they would be returning £600 per calendar month after all costs into their account each month. Okay, so after the first year, they're more than 50% back on their, £7,000. They're almost 100% back after the first year. On their investment, and it's a 5-year contract. So this is a pure, almost I call ethereal investment. It's a cash-on-cash investment. That you're not actually investing in anything that is substantive or tangible or anything like that. You're just investing in a contract, and then getting a return on that investment in the contract, which over the 5-year period might get you 4 to 5 times your investment, your initial investment back. Of course, there's no capital back at the end of it. That's probably depreciated away, and you might choose to go and pick up the furniture that's 5 years old if you wish to, but obviously that's not really something that you'd be considering. So it literally is, well, you give me this much money now, and I will give you this much money over the next 4 to 5 years, and that's not a bad investment, is it? And the people who are investing on you are now saying to you, come on, I want more units. Is that the case?
and you're scaling your business as quickly as you can because you're struggling to keep up with the demand from your investors.
Not only the demand from investors, but the demand from guests as well. There's opportunity for growth here, and the current sticking point that we have is finding suitable properties for us. So there's lots of opportunities to take on properties that are the high rent roll, that don't produce the same sort of return on cash. Lots of opportunities to take on new types of stock, so higher quality apartments maybe. But really for us, it's about sticking to the cookie cutter model that's proven and working for us and meeting the demand of our existing clients. So ensuring there's adequate parking for the contractors, ensuring that it sleeps enough guests, ensuring that the facilities for them are what they currently expect.
So let's look at a couple of alternatives to that and just understand why this is the sweet point that you found. I mean, if we look at, say, the standard management model, perhaps one that Graham and other management companies would do, this investment, this change of purpose from a buy-to-let to the service accommodation would be an investment that the owner of the property would be having to fund. So it's a lot harder then to take on the property in the first place because you've got to persuade the owner that, yes, I would like to take the management of your property, but you've got to put a 12 grand upfront cost into it. What you can say to them is actually you don't have to put that cost into it because, I've got this contract investor who's actually going to fund that. So it's easier for you to take on properties than it would be in the standard management situation. The other option, of course, if you look at it from the other way, is as your company gets bigger and better and might be starting to produce quite a big taxable, profits from what you're doing, you might say, well, look, I want to make those investments myself rather than have this third party involved. But the problem with that is, of course, as we've talked about earlier, you're taking on risk, you're taking on liability, you're taking on a different model to your cookie cutter model, which you need to manage. And of course, the quicker you scale, the more it's going to put pressure on your cash flow. Whereas the way that you're doing it, there's no pressure on cash flow whatsoever. You can scale it as quickly as you're able without having those financial pressures. The other way around, that actually you're having pressure from your investors to say, I want more. So that's a really, really interesting model that you're putting out there. And what I'm really keen that you tell us about this is that, of course, if there are any Unity members or anybody else that's watching this on YouTube who thinks, well, actually, I wouldn't mind investing, 10 grand. I've got the spare 10 grand in order to invest in this sort of thing. There's ways that you can get into property. You can get into the armchair investment of property and make a return on investment. And you've really hit that sweet spot. There may be others that are doing it, but I don't know anybody else that's doing what you're doing at the moment. It's a really interesting concept.
Yeah, I think there's a few people that are doing this, and one of my concerns for both parties is that they are possibly marrying up incorrect investors with incorrect properties, which causes concerns about how guaranteed that landlord's income is. Whether the potential returns are true for that particular investor. So I think my advice for anybody that's looking to take this strategy on or inquire about this would be initially ensure that your knowledge is competent enough to ensure that the deal that you're taking on is right first. And look at the deal first and then the management company secondarily. As Graham said, this has been going on for a long time, service accommodation or furnished holiday lets have. And there are a plethora of managing agents in most areas now. And your managing agent really is the key to your success for both HMOs, for service accommodation, in my opinion. And a lot of the contract is based around trust between our investors and ourselves continuing to operate and execute our promise to them for the duration of that period. So I think that if you are looking to do this, you need to be making sure that the deal, the demand there is there. And then secondarily, looking at the relationship that you foresee yourself having with the provider of that contract and the management terms.
That's brilliant, Dan. If anybody's got any questions for Dan on that, please chip in at this point. I think we're probably all sort of running it round our heads and trying to get our heads around it, to be honest.
Yeah,
you couldn't have explained it clearer, but
Yeah, no, go on. I send you 10 grand to help your cash flow, and you send me what?
That's right. So you're not sending us that 10 grand, but you are sending us the sourcing fee, which works particularly well for us because obviously we're getting paid up front, and then we're taking cash flow on as well. So it's very similar to a traditional sourcing business that then offers the management service on the side. It's just making sure that these assets or properties are working as hard as they possibly can. And we're seeing a real change in demand for it because in the areas that we're operating, there's not a lot of great accommodation on offer for these guests. That's something that we're hoping to.
I love it. I think it's great. I think you're in a good area.
Yeah, and
going to explode.
And I've seen the accounts, and I can tell you it's good. Yeah. No, I think it's a fantastic model. I think it's great for you, Dan, and I also think it's very good for people who do want to do these armchair investments. Ultimately, they're investing in your competence, your expertise, and your drive. And so long as they back the right horse, they'll get the returns. Yeah. I
think that's exactly it. I think this like anything can work, but it is about backing the right horse and ensuring that you are working with somebody that is trustworthy, has a good reputation, knows what they're doing, is honest, has integrity, and really understands the model, and is here to stick around. There'll be enough people that are popping up and offering this, but whether they're here to stick it out is another question.
Yeah. Shane,
what would be the risk to the armchair investor in that? Would it just be that you don't get the numbers and you don't get the return? I'm guessing there's no guarantee from you.
Yeah, there's no guarantee for us. So I think one of the biggest risks that they need to realise again is the provider ensuring that they pick somebody that is going to have their best interests at heart. Obviously, we get paid based off the level of income that we produce for them. So we're incentivised on that front, but also incentivised from the responsibility side of things. One of the ways that we de-risk things is that my experience, my background is in HMO lettings. So a lot of the properties that we're taking on, we're making sure that these can work from a HMO perspective. So if there was a shift in the market, we weren't able to operate these properties as service accommodation anymore, we could look at using a secondary exit as a HMO. When COVID hit, obviously, as Graham said, bookings were cancelled left, right and centre. What Stoke and Crew also lack is a provision of good quality furnished properties in the area as well. So we put most of the properties were filled with families for between 1 and 3 months over that period. So I don't particularly feel exposed from a filling the rooms or filling the properties aspect. I think the risk is more about the provider staying around.
So how far through the cycle are you in the 5-year contracts so far from the first properties you've done?
From the first property that we took on, we must be 24 months into that cycle.
Yeah. So I suppose this is a model for you. As soon as you get, because it's one of those, you're only as good as your reputation, which is pretty much stands in most businesses. So I suppose the further you get towards completing full cycles, reputation, feedback, recommendations, that's when it's really gonna separate you from the rest, isn't it? Once you've gone. I know someone like me, straight away, just say if I was looking at you, I would not want to be doing what you're doing personally. But like I say, I'd really like to be doing what I'm doing, but would happily do that. But for you, I'd be like, well, maybe not yet, like that kind of approach until the cycle's gone. But you can see. I think the
thing is, Shane, as well, is that I don't think Dan has to look too far for investors, because when somebody with, where 100 grand is not really a problem, and they say, okay, I'm going to stick 7 grand on your model because, quite frankly, it's not a big risk.
Completely agree.
I'm not going to lose the whole 7 grand, that's for sure. I might just not get the return that is being promised at this point in time. But the point being is that when Dan starts to then deliver on that 7 grand, and you're a year in and you see what you've got for your 7 grand investment, you say, right, I want 4 more, please, Dan.
It's never going to be a one-time investment. One investor is probably going to turn into 5 investments from one investor, and that's probably good because you've got less clients but more properties. Yeah,
well, you need to start to worry about VAT though, of course. So
yeah, well, that's where he needs a good advisor. We're trying to find a
legitimate reason to have different companies, Rupert?
One point to mention though is I actually have always found it easier to raise figures over 6 figures than I have with sums less than £10,000. I think the avatar or the investor, you can obviously offer people with 6 figures or plus a lot of security. Whereas you are completely right, there's not an awful lot of security attached to this model. And generally people that have this sort of capital that's lower end are maybe a little bit more emotionally attached to that level of finance. Yeah. So it has always been easier to sell or raise larger sums of money than it has been small sums of money. But the way that we're relying on increasing this business is simply through word of mouth. We don't do particularly any heavy advertisement. This is just a case of referrals of our current investors that are receiving a good service, telling friends and going, this is something that you should look at being involved with.
That's brilliant, Dan. Thanks so much for taking the time out and sort of parking up and everything. Shane, have you got another question? No, all good. No, that was absolutely brilliant. Thank you.
Apologies for my car. Thank you very much for your time. I will.
No, that was great.
Get back inside.
Absolutely great. We're on the last lap now towards climb down. We've dropped to 9 people for obvious reasons. Everybody's got other things to do, but we are being recorded. So I'm talking as if I'm talking to 100 people, and I'll just carry on and see the thing through. So what I'd like to talk about is one of the other big fears of people who are interested in going into service accommodation is, you know, the headlines about the parties and protecting your asset and you know, that disaster that can happen, and how you can prevent that happening, or at least protect to the greatest extent that would not happen. And then finally, I want to talk about communication and operation. I'm not going to go into a massive amount of detail on either of these, so we're probably about 15 to 20 minutes away now. But it's really about dispelling myths. People talk about service accommodation being very time heavy, and there's a lot of effort and work goes into it. And they also talk about it being very high risk, because obviously a party can go in there and completely trash the place and cost you thousands of pounds. Well, from my experience, I started my unit, and I only have the one, so I've only got that to fall back on really, but I started that unit in March 2018. And to date, my repair bill is £150. And that's not an exaggeration or an under exaggeration or whatever. I know the one particular incident where I actually withheld £500 deposit to pay for this £150 repair. I can justify the rest of it because my builder came all the way from Mansfield on a Sunday with 2 of his people to sort something out, which actually didn't need sorting out in the end. But the cleaner, you know, the guests had left it in a right state, and it wasn't really. It needed to be sorted out very, very quickly because there was another guest coming in. So I'm actually on a negative cost when it comes to repairs, in all honesty, to date. So how can you achieve that? And one of the things is you've got to be pretty hard on your guests to begin with. You've got to. I mean, I normally say goodbye to the guests that I do with great friendship and think they're wonderful people, and 95% of them are just, you know, really caring, normal people who would tidy up after them and put the bins out and, you know, make the beds and all the rest of it. But it's that 5% you're having to protect against. So when you first get the booking, you treat every guest as if they're a criminal that's just come out of prison, basically. And they've just started off a prostitute ring and they've got 3 girls coming around with them. And that's your starting point. So the way that I do it, and obviously everybody finds their own way of achieving it, but when they're into booking, I would take a pre-authorization from them, and I take a pre-authorization of £500. Now, the difference between a deposit and a pre-authorization is that pre-authorization is something you can do when you've got the merchant account on a credit card. And basically what it does is it reserves funds on their credit card. So if their credit card limit is £10,000, and you take a pre-authorization of 500, then they've got £9,500 left on their credit card limit, spending limit. But it doesn't actually take the money from them. It gives you the opportunity to take the money from them in the future, because obviously you know that there's that £500 in their credit limit in order to take that money. But you're not authorized to take that money just because you've taken a pre-authorization. You know, you have to have, backing that up, an authorization from the guest to take that money if there is a problem. And the way that I do that, and I'm just going to share a screen with you, is this nice little thing here. Oh, muted myself. Here, called Signable. Okay, and what this is a very, very simple little tool where I can make a Word document, turn it into a PDF file. I can create from that basically what they call an envelope from the templates there. And I can then put signing and date fields into it. And then this can be sent by a web link to the guest. And the guest can then click on that web link. And once they've clicked on that web link, they can then sign this document. And my document that I'm talking about is, let me just see, not that one. I can't see if I've got, here we are. Okay. No, that's not it. Here it is. Okay. It's terms and conditions. And unlike the ones you agree on a website, you can actually read these if you want to, but there's still about 14 pages of them. And at the end of it, then they sign. And what happens is that when they actually click on the link, they actually get little boxes here that they have to sign. So once they've signed that terms and conditions, and I also ask them to upload their photo ID at that point. And once they've signed their terms and conditions, that authorizes me to take anything up to that £500 for any damage. So when they're actually coming in to the apartment, they're coming in with the knowledge that I've got the ability to take £500 from them if they don't behave properly or if they spill coffee or whatever. And that makes a huge difference. It makes a difference not just to the troublemakers, it makes a difference to any and all of the guests into how they behave in that apartment. So for example, the dining table is in the living room, and that's a separate room to the kitchen. So they've got to go out the kitchen into the corridor, into the living room to the dining table. So they've got to cross quite a lot of carpets, and they've got to open and close 2 doors. Now, if you're doing that holding a mug of tea or a mug of coffee, then the chances are that, you know, if you're not very careful, that coffee's going to spill on the carpet. But if you have authorized £500 worth of damage to the owner, it might just encourage you to put a saucer underneath that coffee or tea and just carry it a little bit more carefully. There's amazing behavioral changes that happen with a guest when they actually could lose money by doing damage and things of that nature. So that's basically, in simplistic terms, how I do it. Now, I often get quite a lot of guests saying, well, you didn't tell me that, or I don't want to do that, or I haven't got £500 credit in order to pay this deposit, or at least have this pre-authorization. And I often get quite a bit of toing and throwing of communication very close to the arrival time. But of course, when they book in the first place on booking.com or on Airbnb, it actually states before they book that that is the situation. It's subject to my terms and conditions, and that's what it is. And that a deposit, that I have the right to take a deposit. And so I just refer them back to what they read or what they didn't read, but it was stated before they actually made the booking. But the problem is for them is that they've paid for the booking, they're about to turn up, I've got the money, I'm asking them to reasonably sign and give me this pre-authorization. And if they don't get an access code. So, and I've had situations where people have been outside the apartment in the taxi, having to phone China to try and get someone out of bed in order to upload some ID for me because they haven't done it. But I've asked them 3 or 4 times before and they haven't done it, and they've just turned up and expected to get in. But when they realize that they can't get in unless they get it sorted, then they do it. In this case, it was quite interesting. I had to marry up the ID to the credit card because the person that booked it was a completely different name to the person that had paid for it. So I had the photo ID of the person who booked it, but then I had the pre-authorization and the payment from another person. So I said, no, I need to have the photographic ID of the person that's paying, because otherwise you might have stolen somebody's credit card and you might be paying with somebody else's credit card, you know? So the key to this is putting in a little bit more effort at the beginning up front to make sure that people go through your processes and your motions before you let them in. And they all do. They all fall into line and they all come in the end. I've never had a guest that actually has been turned away or not got in, and they've all complied. But some of them have done it kicking and screaming. Some of them had to have gone to a cash point, you know, and then give a cash deposit or something of that nature, which occurs occasionally. The other thing about protecting the asset is one way a lot of people do is they don't do one-night bookings, because it does tend to be that if somebody is going into the apartment in the place with malintent, then they will tend to book for one night, and they'll tend to book on the day that they arrive. So you've got a kind of a warning flag situation there. If you've got a booking that comes in on the day of arrival, it often tends to be for quite a few people, or they might stay for 2 people, but then a lot more are intending to turn up. These are the sorts of warning signs that makes you certain that you've got to go through your process very, very strictly from that point of view. And if I can see that I've got a problem emerging, I always give the guest at that point in time the opportunity just to cancel, and I'll give them a full refund, particularly if they've only booked that day. And that just gets them the get out. And those people who've actually taken that get out then come back and thank me for giving them the full refund and for being so helpful to them. So yeah, if it happens at a weekend, on a Friday or a Saturday, then even more, you know, chances of parties or troubles. But the one-night stay, I did say I'd come back to that. A lot of people can't make money on one-night stays because they've got to pay for cleaning. And so obviously the economics of a one-night stay don't work. Well, the way that I've found it works for me is I take a cleaning fee for every check-in. I actually take £95 cleaning and admin fee for every check-in. So if it's an £80 stay, then that's £175 that they'll pay for the one night. So they pay more for the one night, but the cleaning fee covers those fixed costs that I've got. So I am able to take the one night bookings as far as that's concerned. Just see if there's anything else. The only issue that I do experience with this is with Airbnb, because Airbnb have their own systems that they want to sort of overlay, which conflict to a degree with my systems, where Airbnb, they want the smoothest, easiest ride for the guests. So they basically introduce for the owners, for the hosts, a guarantee where they're basically saying, well, if the guests trash the apartment, we'll pay for it. Well, it's all well and good, but I have 2 issues with that. Firstly, I've got to claim the money from them. And I know that it's basically at their discretion whether or not they're going to pay me that money or whether they're not. And the second issue is it doesn't overcome the saucer on the cup of tea, which is basically that the guest has not got any skin in the game with regards to looking after my apartment. Airbnb are backing that situation. So I don't like that. And with Airbnb, I take a viewpoint on the bookings, where I will look at the profile and the reviews of that guest. I will take a view on how I feel about that guest. One little trick is, once you've got the booking, you've got the telephone number. Once you've got the telephone number, you can then go into WhatsApp and you can create a contact in WhatsApp. And lo and behold, their photo comes up. Well, that can tell you a fair bit, particularly if they're wearing a pirate hat. The photo is connected to their Facebook profile. So you've got their telephone number, you've got their photograph, you've got their name. It doesn't take a couple of seconds to go onto Facebook and actually find them on Facebook and read some of the posts on Facebook that they've made about what a fantastic party it is, or does everybody know that we're all descending on Loughborough tonight for a booze up? So there's other ways that you can very, very quickly, get the measure of a potential guest that's booked on Airbnb. And then I take the view. I might say to them, I am going to operate my deposit policy that I have because of these reasons. And I just have like a tick box of reasons. Last minute booking, not many reviews on Airbnb and things of that nature. And say, so normally we'd let Airbnb people coming in without the deposit, but in this particular case, for these reasons, we're going to employ our policy of taking a deposit from you from that point of view. So that's some little tips and tricks that I've picked up and employ to look after my apartment and make sure that I don't have problem guests coming in. And the only other thing to finish off is to talk about workload, really. I used to have a PA doing all of this for me. And that took a lot, I just let it happen. And from time to time, she'd just discuss guests or ask me questions and things like that. But she just got on with it and did the job and went through these processes that we designed together. And then she became pregnant and went on maternity and stopped doing that. So I took it on myself, and I haven't given it back. I could easily outsource it tomorrow to somebody if I wanted to. It's not a big problem. I actually enjoy it, and it really doesn't take a lot of time whatsoever. And that incident I had with the taxi waiting outside and all the Chinese people in the taxi, and apparently there was about 12 of them who booked it on a two-person booking. I was actually on the beach in the Seychelles at the time, and I was going through this conversation while Elena was next to me reading a book, and we were just having a bit of a laugh about it. So I was just saying, okay, well, this is my reply to that. We'll wait and see what comes back next, because they ain't getting the keys for this apartment. I'm on the beach in Seychelles. There's no way I'm letting that lot in. But they did finally comply with everything that I asked them to, and they got in. The interesting thing with that particular group is it was Chinese New Year, and they didn't actually stay the night. They just wanted a place to cook a meal for a group of people. So they'd all gone home by 10 o'clock that night. But I think that the point is with communication, and I'll just quick final share if I can. Here we go. If I can find it. Yeah, here it is. So my final share is this, which is one of these lovely things that Apple do, that goes across all of your devices. It's on my iPad, it's on my phone, it's on here. And of course, when you edit it on one, it just automatically uploads it to the other one. It's called Notes. And I think Notes is brilliant because if you ever want to repeat anything as a template, if you've got it in Notes, you know exactly where it is and you can just literally copy and paste it into where you want to do it. So I use WhatsApp. As soon as I've got the booking, I've got the telephone number, I set the guests up on WhatsApp. 95% of guests are on WhatsApp. And then I start communicating them by simply just typing notes. Looking forward to your stay. This is how to unlock the door. This is the code. looking forward to your stay. I need you to sign this terms and conditions, you know. And so any scenario that I encompass, I just add a new template note for, because I'm likely to encompass it again in the future. So I've got another note there that I can just use as a template, just to copy and paste. So the operation of it actually doesn't even require any mental strength at the time. You literally just basically are going through a process and following that process through. So yeah, people think I'm crazy for not outsourcing it. It's not a cost thing, but I enjoy doing it. And I think it's just illustrative of how little work there is involved. I'm living in Portugal now, and I'm running this unit in Loughborough from here. And it's that there is no further hurdle to me living in Portugal than there was living 10 minutes away from the unit, because I was never going down to the unit when I was living 10 minutes away from it. So, you know, it's exactly the same. Okay, so that's sort of a fly through really of service accommodation. I think we've covered a huge amount. Graham, I can see you nodding away. Do you want to add anything to that before we close up?
No, it's great. Thank you.
Yeah, good. So has anybody got any questions?
Are you going to source any in Portugal?
It's a good question. That's a really good question.
Yeah, where can we book your place, mate? I've just been.
Yeah, well, that's another good question. I will be. We will be disappearing over the school holidays in our motorhome, and we will be renting our house out. It's the done thing over here. Everybody rents their house out in the school holidays because the school holiday rental income is just so high that you can't. It's hard to justify not doing it, in all honesty. So. Yes, we will be doing that
as well, isn't it? I hear there's a lot of Dutch that love holidaying in Portugal. Yeah.
Oh, all over Europe. I had a kite surfing lesson from someone from Ukraine yesterday. Everybody from all over Europe is here, to be honest. Michael, do you have a question?
Yeah, I texted in the chat. They don't argue if they're going to read a contract for 14 pages before they rent the place.
Oh, yeah, they'll argue about everything. I ignore every argument. If I've asked somebody to do something and they come back to me with a reason not to do it, I don't reply. Why should I reply? I would only complicate the message. The message is I want you to do it. If you don't do it, you don't get in. But, you know, quite frankly, Michael, how many websites have you clicked OK to in the past week?
Quite many.
It's the same thing, really.
But the issue is, I think the issue is with Airbnb, there's just most for the client, not for the owners. Because if you get an issue, I have some issues in this house. I mean, it's a hell of a problem to get some money back from Airbnb. As I had before home away, and that's much easier. And they don't argue with you or whatever if something is broken. But so I go to looking for booking.com because Airbnb, well, it's good, but it's certain clients.
Yeah, well, on Airbnb, I've got it's subject to my terms and conditions in the description, and I've also got that you will be required to have a pre-authorization in the description. So it's not that you can't do it on Airbnb, but they don't like it. And they, you know, would prefer to say that their method of vetting potential guests through the review process and their guarantee means that hosts don't need to do it. Well, I take a view. I mean, clearly there are some guests which, you know, with a string of good reviews, you know, a family with, or some parents who are coming to a graduation ceremony, you know, you take a view. When it looks fairly safe, then I don't bother employing my situation there. But if there's any risk, I see any risk, it's my apartment, it's not Airbnb's apartment. So I employ my own strategy in that situation. But perhaps you can tell me a bit about your your place, Michael. Where is it?
This place here?
Yeah.
It's like 7 kilometers up from the ocean, from Vilamora. Right up, it's a small village called Val Judeo. It's 95% Portuguese. My name is seriously from UK, another one is from Germany, and the rest is Portuguese. And it's why you're renting these places, that it's free houses on the property. These houses I live in is just has 1 bedroom, which I'm staying in, and just 4 meters back behind me, I have 2 small cottages, and they are like 50 square meters, completely with the bedroom, bathroom, kitchen, and a kind of living room. So that's why I like it, because when my kids coming down, they can be there and play the movies or playing the game, whatever they want, and dad can sleep. And also my Tukla garden is like 3,000 square meters, which I really likes here. You're going to see it when you arrive on Sunday. And but I try to rent out a little bit in the summer, because I have these costs for the gardener, and they take care of the pool when I'm not here, and I'm not here in the summertime because it's too hot. So, but on some way, Airbnb took over the business, because in the beginning, Home Away was fantastic, and I got all my bookings from there. The last couple of years, I didn't get any requests or bookings. So right now it's like Airbnb, and I'm full booked for the summer. So, yeah. But some of the tenants, especially the Portuguese, you shouldn't rent out to, because they don't care. They just rent it, and they invite friends, have parties, people coming over. Oh, you can stay here. I have 9 beds in this property here. So
what I'll do, Michael, is I'll put a link to that in the comments of the YouTube video. I've actually seen some photos of it, and you obviously have a really good taste for design and interior design, because it looks absolutely superb. And I look forward to seeing it when I come down on Sunday. So yeah, fantastic.
But it's also, it's a good money. Last year was my absolutely best year, and I made like 15,000 euro in 8 weeks. So it's quite good money, like some for these 2 months.
And so if you're thinking of staying in Michael's apartment, and if you've got an 8 for 15,000 euros, then yeah, Vilamora, lovely marina, great restaurants, nightclubs. It's yeah, it's a place we're thinking of. It's about an hour from us, but we'll probably bring the motorhome down and sample a bit of the nightlife when things get back to normal. Yeah.
Okay. Yeah.
Brilliant.
I'm looking forward to see you.
Yeah. Anybody else got any other questions? Right. Well, I've got to give my thanks to Yuliya, Graham, Dan, and everybody else that have stayed the course for today. And I hope that's been useful to you. If any Unity members want to get into serviced accommodation, they're thinking about it with any developments they're doing or anything like that, then of course, we'll help you all along the way. You've met some other Unity members with great experience in it, so you're not going to be left drifting there. So yeah. So I'll bring this to a close. Thanks very much, everybody, and look forward to seeing the Unity members next Monday for our cafe session.
Cheers, guys.
Thank you all. Really good. Thank you.
Thanks, guys.
Thanks.
Good night, and thanks.